Jamaica just turned the global energy world upside down with a billion-dollar deal nobody saw coming. In today's video, we're unpacking Excelerate Energy's staggering $1.055 billion purchase of New Fortress Energy's critical assets in Jamaica. This isn't just a local deal. It could change energy flows across continents, rewrite Caribbean power politics, and send shockwaves through global energy markets. Stick around, because what happens next might reshape how the world trades energy forever. Don't forget to subscribe for more cutting-edge global business stories. Let's take a moment to set the scene. When most people think of Jamaica, their minds go straight to stunning beaches, reggae rhythms, and vibrant culture. But in May 2025, Jamaica quietly became the center of attention for something far more strategic: energy infrastructure. That's when Excelerate Energy closed a massive deal to acquire some of the island's most important energy assets from New Fortress Energy. What did this include? 2 major liquefied natural gas (LNG) terminals, Montego Bay and Old Harbour, and a combined heat and power plant (CHP) in Clarendon capable of producing 150 megawatts. These are not just local power stations, they are the backbone of Jamaica's electricity supply, providing over 60% of the country's power needs. For New Fortress, this wasn't a growth move, it was a desperate exit. Buried under nearly $9 billion in long-term debt, they had no choice but to sell their prized assets. But here's the real question. What does Excelerate gain beyond just terminals? And why should the world care about a deal on a Caribbean island? The backstory. How did we get here? To truly grasp the weight of this deal, we have to rewind almost a decade. Back in 2016, New Fortress Energy embarked on a bold journey to transform Jamaica's energy landscape. The island had long relied on expensive, polluting diesel and heavy fuel oils for electricity generation. This wasn't just costly, it was environmentally damaging and economically unstable. By 2019, New Fortress had made a breakthrough. They commissioned the Old Harbour Floating Storage and Regasification Unit, FSRU, a floating LNG terminal that could bring cleaner, cheaper natural gas to the island. This was soon followed by the Montego Bay terminal. With these 2 facilities, Jamaica began its rapid pivot away from costly fuels toward a more sustainable, affordable LNG-based power system. By 2020, the transformation was undeniable. Over half of Jamaica's electricity was coming from these LNG terminals, making the country a shining example of how quickly an emerging market could transition to cleaner energy. Analysts watched closely, admiring the efficiency and ambition. But underneath this success, trouble was brewing. New Fortress Energy had aggressively expanded, but by late 2024, cracks started to appear. With nearly $9 billion in debt weighing heavily on its balance sheet, the company was struggling to keep operations smooth. Securing long-term, low-interest financing proved impossible, forcing them into short-term, high-interest deals to buy LNG, especially in volatile Latin American markets. This unstable financial footing meant they had to delay bond payments, cut dividends, and face a critical choice. Continue fighting the mountain of debt or sell off core assets? They chose the latter, setting the stage for Excelerate's opportunistic move. But what exactly did Excelerate see in this opportunity? Why was this acquisition so critical? Excelerate moves in, the game-changing deal. In early 2025, Excelerate Energy stepped onto the scene. The company made a decisive offer, over $1.06 billion in cash, to acquire New Fortress's entire Jamaica portfolio. By May 14, 2025, the deal was finalized. Included in this purchase were the 2 LNG terminals, Montego Bay and Old Harbour, and the 150 MW combined heat and power plant in Clarendon. What's striking is how Excelerate structured this acquisition. They combined their own cash reserves with a massive $850 million bridge loan, signaling both financial muscle and a pressing sense of urgency. But what made these assets so valuable? For starters, the Jamaican LNG facilities are backed by long-term take-or-pay contracts, averaging 13 years. This means Excelerate is guaranteed a steady revenue stream, regardless of actual LNG usage. Projections suggest these contracts could bring in nearly $2.9 billion in margin by 2039. A huge incentive for any energy company to lock in such stable cash flow. So for Excelerate, this wasn't just about owning terminals. It was about securing predictable future earnings in a fast-changing energy landscape. Now that Excelerate owns the entire LNG infrastructure in Jamaica, they control a vital piece of the island's energy puzzle. But the implications go far beyond national borders. Jamaica's geographic location is incredibly strategic, sitting near one of the world's busiest shipping corridors, right at the crossroads of North America, South America, and Europe. These LNG terminals are more than just power stations. They are prime real estate in the global energy map. This opens up numerous possibilities. For example, Excelerate could leverage these terminals for LNG bunkering, supplying LNG fuel to ships traveling through the Caribbean trade routes. This would tap into the growing global shift toward cleaner marine fuels. Additionally, the company could support industrial expansion by providing reliable, stable power to Jamaican factories. There's even potential for selling surplus capacity to neighboring islands, expanding their regional footprint. Plans are already in motion to grow the facilities, doubling the CHP plant's capacity in Clarendon, or increasing LNG storage capabilities could be game changers. Excelerate's strategic positioning is further strengthened by a 20-year LNG supply contract from Venture Global. This ensures the upstream fuel supply is secured, minimizing risk and matching perfectly with the downstream infrastructure they now control. But the story doesn't end there. What truly has energy experts and investors talking is the global ripple effect this deal creates. Excelerate is no longer just a player in Jamaica. It's becoming a central hub in a sprawling, interconnected web of LNG infrastructure spanning the globe. And what comes next may change the entire game of LNG geopolitics and global energy supply. The most controversial and perhaps unsettling twist is yet to be revealed. With this acquisition, Excelerate Energy isn't simply a Jamaican energy company anymore. They are rapidly positioning themselves as a major global LNG infrastructure powerhouse. Beyond Jamaica, Excelerate owns and operates critical LNG terminals and infrastructure in some of the world's most strategically important markets, places like Bangladesh, Brazil, Pakistan, and Finland. What does this mean? It means the deal in Jamaica is far from isolated. Instead, it is part of a much bigger chessboard move in the global energy arena. Excelerate is assembling an impressive portfolio of LNG last-mile delivery points, terminals where liquefied natural gas is regasified and sent into local power grids or industrial users. By controlling multiple terminals and securing long-term LNG supply contracts, Excelerate gains incredible flexibility. They can redirect shipments, adjust volumes, and react to price swings or geopolitical shifts faster than most competitors. This vertical integration from supply to terminal to end user is a powerful business model. Some energy analysts applaud this strategy for creating efficiency and reliability in what has been a fragmented LNG market. Others express concern. They warn that concentrating so much control in one company risks creating monopoly-like conditions in certain regions, limiting competition, and potentially driving prices higher for consumers. In the Caribbean, this concern is particularly acute. The region's relatively small markets and limited LNG infrastructure mean that Excelerate's dominance in Jamaica could easily spill over to neighboring islands if they expand their footprint. Here's where things get especially complicated and controversial. Before this deal, Jamaica had multiple LNG import options. Different companies operated separate terminals, offering a balance of power and competition. But now, all of Jamaica's LNG infrastructure is in the hands of a single company, Excelerate Energy. This consolidation effectively creates a monopoly not officially sanctioned by law, but one that holds real power over Jamaica's energy supply chain. If Excelerate decides to raise fees, alter contract terms, or change supply priorities, the Jamaican government and consumers have very limited alternatives. There is simply no competing terminal to turn to and no backup supplier with infrastructure in place. Such a monopoly risks reducing competition, potentially driving up prices and making Jamaica, and perhaps the wider Caribbean, more vulnerable to supply disruptions or political bargaining. Globally, this shift signals a new era in LNG geopolitics. Control the infrastructure, control the flow. And control the flow means controlling prices, supply security, and ultimately energy policy leverage. Governments, regulators, and investors around the world are watching closely. What Excelerate does next could set a precedent, either showing how vertically integrated energy companies can bring stability and growth, or warning of the dangers of consolidation in critical infrastructure sectors. To appreciate the full weight of this development, it helps to zoom out even further. Energy infrastructure is one of the most strategic assets a country can have. Control over it is often intertwined with national security, economic independence, and geopolitical influence. In the case of Jamaica, a small island economy heavily reliant on imported energy, the stakes are particularly high. Energy costs affect everything, from household electricity bills to the competitiveness of local businesses and factories. Having a single company dominate the LNG import market may streamline operations, but it also concentrates a critical sector's risks. If Excelerate's pricing shifts suddenly or their supply chain faces disruptions, the effects could cascade throughout Jamaica's economy. This could impact everything from transportation costs to food prices and industrial output. Regionally, Caribbean neighbours watch nervously. Many islands are exploring or already investing in LNG infrastructure as a way to modernise their energy grids and reduce reliance on diesel or heavy fuel oil. Excelerate's expanding influence in the region raises questions about whether they will dominate these emerging markets as well. Internationally, big LNG buyers and sellers are recalibrating their strategies. Excelerate's growing portfolio offers a rare combination of upstream supply security and downstream distribution power. This gives them an unusual edge when negotiating LNG sales or contracts. Looking forward, the next chapter for Jamaica's energy future will be shaped by how Excelerate manages its new holdings. Will the company invest in expanding and upgrading the terminals and the Clarendon CHP plant? Early signs suggest yes. Plans to double the CHP plant's capacity could dramatically increase Jamaica's power generation capabilities, reducing blackouts and supporting industrial growth. Moreover, Excelerate's LNG supply contract with Venture Global secures steady fuel at competitive prices, helping to stabilize Jamaica's energy costs in an otherwise volatile global market. However, the government's role is critical. Policymakers must carefully balance attracting investment and growth with protecting consumers and ensuring competitive markets. Regulatory oversight and transparent contract terms will be essential to avoid the pitfalls of overdependence on a single company. Public sentiment is also a factor. Jamaicans expect affordable, reliable electricity and may grow wary of a monopoly controlling such a vital service. How Excelerate navigates this trust will influence its long-term success. This deal is part of a broader global transformation in energy. The world is moving away from oil and coal, accelerating the use of natural gas and renewables. LNG is a critical bridge fuel in this transition, cleaner than oil, flexible and transportable across oceans. Companies like Excelerate, which control LNG infrastructure at key global nodes, are strategically positioning themselves for the decades ahead. They're not just energy providers, they're becoming gatekeepers to energy flows that power cities, factories and entire economies. What happened in Jamaica might seem like a Caribbean story, but its ripple effects are global. It highlights the rising importance of energy infrastructure control in geopolitics, the evolving nature of energy markets, and the complex balance between growth, competition, and security. Excelerate Energy's $1.055 billion acquisition of New Fortress Energy's assets in Jamaica is more than a business deal. It's a strategic masterstroke that gives one company near total control of a nation's critical energy infrastructure. This move locks in long-term revenues and sends a strong signal to global markets about the growing power of integrated LNG players. But it also raises important concerns about market concentration, energy security, and the risks of monopoly power, especially in smaller, import-dependent economies like Jamaica and the wider Caribbean. The true impact of this deal will unfold in the coming years, shaping how energy is produced, traded and consumed across regions. If you found this deep dive into one of the most significant energy deals of 2025 insightful, please take a moment to hit the like button. Subscribe to the channel for more expert analysis on global business, energy markets, and geopolitics. I'd love to hear what you think. Would you trust a single company to control your country's energy supply? What risks or benefits do you see? Drop your thoughts in the comments below. I read everyone and enjoy the conversation. Thanks for watching, and I'll see you in the next video.